Well, what do you say we dive into our futures trade and we'll see how the corn market is holding up here in the early going today. All right, let's go to the corn board in Chicago first. And on the corn market, we opened up under pressure today. It was down about 5 cents on the open, then it went down to about 6 lower, and we're going to have to quit looking at it. Every time we look at it, it gets lower and lower. July corn now down 7.5 at 366 3/4. Well, that's on a new low for the day. We have December down 7 1/4 at 385 1/4. Also a new low for the day. So the pressure is increasing as we go along here. As we look at the soybean trade this morning, we opened up a couple pennies lower. Well, look at it now. July soybeans at 9.15 even. That's down 11.5 cents. And now November down 8 at 9.21 1/4. Both of those are within a couple of ticks of their low of the day. What about the wheat? Well, the wheat had pressure early on today as well, and it's also accelerating. July Chicago wheat down 11.5 at 426 3/4. Now 427. In Kansas City wheat on the July contract, we're now trading at 427 3/4. That's down 9 3/4. On the Minneapolis wheat, we have July currently 5 lower at 563 3/4. And now that one is basically 2 or 3 cents away from its low of the day. And if you look at the cotton market in July, we are now 42 points higher at 77.51, but new crop December is down 35 at 72.44. Well, let's find out what this is all about by going to Chicago, right to the trading floor. And let's check in with Todd Bubba Horwitz of BubbaTrading.com. Happy Tuesday to you there, Todd. I hope you had a good holiday weekend, but what is going on the trading floor all of a sudden? Everything falling apart on the grains.
A great holiday, but you might look at it as a problem. I look at it as a buying opportunity. I think that we're coming down to good levels that I'd want to buy. My biggest concern has been all along remained soybeans. I think corn at 365 is a great buy. I think wheat probably at 425 or 420 is a good buy. So again, I look at this as an opportunity to get in. I don't think that it's a real total shock. I mean, we did push them up pretty good at the end of last week, and of course we had a little bit of speculating on maybe what might happen with weather over the weekend and so on and so forth. And of course, we got the usual. The sellers came back because we didn't get the desired result they wanted. But again, I look at this as a real good buying opportunity. My concern remains soybeans.
What is pushing it down? I mean, it's something is really trying to squash the grain markets today. What is it?
Well, I mean, it's people that bought up that decided they were going to outsmart the market and be long over the holiday weekend, and now they're just puking out. They're getting out of the market. That's, this is more driven by the speculators than anything else. This is not, this is normal when you get a market that drives a little bit too far to the upside and reaches a level. The sellers come in, and here they are. I mean, I don't think it has anything to do with any fundamental reason that's going on. I think it's purely overbought into the holiday, and of course, it didn't get the desired result, and they saw a little selling pressure, and now they're just laying them in, and I wouldn't be surprised to see them go a little bit lower.
This is fascinating because we were just reading how the Commitment of Traders report showed all these large spec positions are net short in the grain trade. And yet you get toward the end of the month and you would think you would see a lot of profit taking hit the market, which would maybe make them lighten up on that, but that would make the market go higher. This is completely counter to that, isn't it?
Well, yeah, but I think, again, I don't know, the reports are always a little bit confusing because of the way they come out. I look at it as that a lot of the spec and a lot of the bigger ones are long in here as well. So again, it's really hard to get a feel all the time because of the way those reports come out. But at the end of the day, Marlon, it comes back down to the order flow and the money. And right now, the longs, the speculative longs are stuck, and they're doing anything they can to get out. And of course, markets are still very quiet. There's not a lot of volume. So it makes it accentuates the move and makes it look bigger.
And it's also important to point out these Commitment to Traders updates are always notoriously delayed when you get the results. So it's always several days late when you finally find out what the positions are. Todd, I want to bring you back here in a little bit. A lot going on in that livestock trade too, and you're well aware of that. We've been talking about it for weeks. We'll talk about it when we come back. Well, there's certainly a lot going on in the ag commodity trade now that we're on the other side of a 3-day holiday break. And of course, as we mentioned, we're coming up to the end of the month tomorrow as well. So anything can happen. And here to talk about it, we have Todd Bubba Horwitz direct with us from Chicago. He is with BubbaTrading.com, which, by the way, I might put in a little plug here. You can find a lot of information there on BubbaTrading.com, not just educational stuff, right?
No, we try, look, again, we want to help make it better. I mean, my biggest goal in life is to help people understand how the markets actually work, and that's what we try to do a lot of at Bubba Trading. And again, it's great because, again, you see certain moves that don't necessarily make sense, but if you kind of have a look at where the markets are working, it then becomes to be more sensible, and that's what I'm looking to do, is to help educate, as well as high school kids too. We educate them as well. So we look like a market, Marlon, that we're still kind of hanging in here, pretty quiet volume-wise. In the cattle markets, a little higher. I think we opened a little bit lower, and now we're just slightly higher. Last I looked, fats were up about 25, and feeders were up about 60, I think. And I don't like them here. I think that there's room to go on the downside. I think that the patterns dictate some selling pressure here. I think that we're going to see a fairly substantial pullback, in which I'll want to be a buyer. But I think that we went way too far too fast to the upside, and I think you see that often, especially in the commodity space, when they push them too far in either direction, the rebound is much bigger than you expect, and that's what I think will happen here. We're looking to buy. I look for much higher prices going forward, but in the near term, excuse me, I think we're going to see some selling pressure here.
Okay, as we run down our prices, as you mentioned, they have turned around a little bit, and we've been on both sides of unchanged today. Let's look at live cattle first. Right now, June up a couple of pennies, but the August contract, that most active contract, is 50 higher now at 119.45. So we're only 2 ticks from the high of the day now, and off of our low by basically $1.50 now. We have October 75 higher at 115.85, and that's also within a dime of its high of the day. Meanwhile, on the feeder cattle trade, as we look over there, we have August up 55 now at 147.50. Everything was lower last time we looked. We have September 73 higher now at 147.48. October 67 higher at 146.45. So on the surface, Todd, of course, we had the cattle on feed report that came out Friday, but because it came out at 11 o'clock in the morning, it kind of it has that appearance that maybe they factored in all the bearish influence from the report before the traders went home for the weekend.
I think you're probably right, Marlon. I think another issue that you have here that I think that has helped drive these is you've had a little bit too many shorts, and there was little bit of a squeeze going on. But that looks like to me that it's starting to resolve itself, and I think you're going to start to see some of that action that we just had to the upside for a while coming back down to the downside. I look for, again, 3 to 5 to 6% lower here, pretty much across the board. And again, until we resolve that backwardation in fats, I think that it only leans to that we go a little bit lower. And of course, the hogs are, slightly lower today. Nothing to get excited about, but I think they're pretty much overextended and have been extremely light on volume and light on trade. And I look for those to turn around as well. But again, longer out into the future, I'm very positive. In the near term, I'm looking for spots to sell them.
You are? Okay. Let's take a look at those lean hogs right now then and get everybody updated. Definitely just a little weaker on the nearbys. We have June lean hogs down 44 at 81.38. We have July down 38 cents now at 81.52 per hundredweight. And you have your August down just 2 pennies now. It's trading at 81.28. It's off of its low by about 15 cents or so, off of its high now by about 35 cents. So, Todd, thanks for explaining all the information. A lot to chew on here today. I appreciate you being our navigation guide. I appreciate it very much.
Thanks, Marlon. Have a great day. We'll see you tomorrow.
All right, Todd, Bubba Horwitz of BubbaTrading.com. They're in Chicago. Whipsaw markets already today.
The day is still young.
It's very young.
We'll keep watching.
The week is very young.
Indeed it is. Thank you, Markets Editor Marlon Bowling.